Peter, what does Charles River Development focus on?
Charles River as a solution provider is probably best known actually in the sort of the institutional asset management, pension, insurance space, where we've been doing business for somewhere around sort of 30 years. Probably the last 15 or so of those, we've had a strong presence in the Asia-Pacific markets. But increasingly what we're seeing is that there's a move, if you like, in the private banking wealth management sector to try and get clients to use more of the advisory and discretionary type products. And when we took a step back and looked at that, we saw that really what that means is that they're offering very much the same type of product set as asset managers, really kind of multi-currency, multi-market, multi-asset class portfolios on behalf of their clients. So from a product perspective and a solution perspective, we made a decision that we were going to focus on really providing the right kind of user interface, the right workflows, and also the right scalability on the platform to provide those kind of portfolios. But instead of running maybe a few hundred or a few thousand portfolios for an asset management company, that would be able to do that in volume. So we're talking about the hundreds of thousands or the millions of portfolios and being able to provide a lot of automation, a lot of exception-based processing.
And what has been the company's engagement of the wealth management space across Asia?
So we've seen probably in the last 3 or 4 years that as a company, our growth in the private banking wealth management space has gone from 0% client base up to around 17 or 18% of our client base is now in the private wealth sector. We really see obviously a big growth in a number of markets in Asia in the wealth space. So particularly Singapore and Hong Kong are the obvious ones, but some of the fastest growing ones are those that maybe people don't expect or don't think of. So places like Indonesia, the Philippines, Thailand. And increasingly we're actually seeing movement in the Japanese market as well to start to offer more SMA and private wealth type of products rather than just a traditional buy a bond or put it in the bank. So we're seeing quite a strong kind of growth towards, if you like, the product set that we offer. So really our strategy at the moment is to educate people across the APAC markets as to the platforms, the solutions and the capabilities that we have, and really try and help clients look at, instead of the tactical view of IT as I have an immediate need, I have a product I need to launch, to really talk to them about what is their 5-year strategy, where are they looking to grow the business, what are they looking to offer today, in 5 years and in 10 years' time, and really partner with the banks to be able to provide them with a scalable platform that's going to grow as their business grows. So that means making sure that we cover the needs today in terms of relatively simplistic asset classes and products, but also providing that time to market for effectively enabling new pre-existing capability in our solution that lets them, instead of having a 3 or a 6 month product cycle, we can bring on products with them in the space of weeks by simply turning on capability and adding the workflow into the existing capability. So we see there's a lot of synergy really between the solutions that we offer and the strategy that we have and the things that we really see happening within the banking market across Asia.
Peter, where do you see the biggest areas of demand for your products and services in wealth management in the region?
One of the biggest trends and topics of discussion across the market, at every conference, in every conversation you have with a sort of senior person in a bank, everybody's talking about digital channels. It doesn't necessarily mean the same thing to everybody, but really where we see the product lines up very closely with the needs of the business today and the, if you like, the strategy they're employing in terms of empowering their advisors, strengthening and deepening the relationships with their customers. It is about that digital delivery. Where we really see there's a lot of value add, if you like, is being able to provide a real-time dashboard view for an advisor that they can pull up in the office on their PC, they can pull it up on a web browser on their laptop in front of the client, or on a tablet or a smartphone. Being able to review in real time with the client, whatever the portfolio looks like, being able to kind of model some different scenarios and then obviously decide which of those to implement. So really starting to provide that digital channel to the advisors so they can have a more meaningful conversation with the client the moment they pick up the phone, instead of having to go, let me just go and find out what your portfolio looks like, look at 6 different systems, scribble some things on a bit of paper and get the calculator out and go, you've got $2 million today. Giving people that real-time portfolio view, and not just of a single portfolio within the client's book, but being able to look at the aggregate and really manage things on more of a household type of basis. We see really, if you like, that's one of the key drivers, particularly in Singapore and Hong Kong, where people are struggling to recruit skilled bankers. They're really struggling for the talent, if you like. So they have to find the systems and the tools partly to attract good people, and obviously having the right technology in place helps to attract good quality bankers, but also empowering their bankers to actually do more in terms of providing the client value, developing and strengthening that relationship, and ultimately the stronger the relationship, the happier the bank is, but also most importantly the happier the client is. So that's probably the biggest right now in the APAC markets.
Is there anything else you'd like to add?
There are a few service providers and also a few of the the banks or securities companies that are really starting to push more into the discretionary mandate kind of space. So starting to get more traction with their SMA type products. And again, that's where we really see again one of the core strengths of our platform is that ability to aggregate models, aggregate different asset manager models into the system. Blend those in different ways to give you an asset allocation for the clients, and then rebalance those en masse. So we're talking about taking 100,000 or 500,000 client portfolios, and on an automated fashion, looking where the cash flows are, rebalancing those cash flows according to an asset allocation model, turning that directly into order instructions to take to market, and managing the execution. So giving a fully automated process for people to offer that kind of the SMA or discretionary product. So that's the other area where we see a little bit slower in terms of the traction, but we certainly see that that's an ongoing trend in some of the key markets across Asia.